Good evening in Austria and in France. Today we have a match for the day 3 of the group phase. So this is the University of Vienna in Austria against Paris 1 Pantheon-Sorbonne University in France. So I give the floor to my colleague, Mr. Manova.
Indeed, thank you very much, and good evening to the two teams. Thank you very much for your coordination for this match. Welcome to the team of University of Vienna, and welcome to Paris 1 Pantheon-Sorbonne University team as well. Today's topic is your day 3 match on whether or not cryptocurrency issuers must maintain reserve transparency consistent with international financial stability norms. So without much ado, I would pass the floor now to you for introductions, starting with Ms. Pitel of Paris 1 Pantheon-Sorbonne University.
Thank you. I'm Alice, a first-year student in international business law in a master's degree, and I'm really happy to take part in this debate today. Thank you.
Thank you. Welcome, Mr. Leffer of University of Vienna.
Hi, I'm Leonhard. I'm a fourth semester student here at the University of Vienna, and I'm really looking forward to this debate.
Thank you and welcome, Ms. Castellani of Paris 1 Pantheon-Sorbonne University.
Hi, I'm Laura, and I'm in the same master's degree as Alice in international business law in 4th years, and I'm really happy to be there.
Thank you and welcome, and University of Vienna's Mr. Grafinger.
Hello, I have been studying the same time as Leonhard, and I'm also very happy to be here and very excited for the debate. Thank you.
Thank you very much. In a few short seconds, you should be able to see the video or the screen with the allocation of positions. Okay, so there are two possibilities for each team. And for today's day 3 debate, it will be the position against that will be defended by the team of Paris 1 Pantheon-Sorbonne University. Thus, the match starts with University of Vienna defending the in favor position. You now have 5 minutes to finalize your preparations. Feel free to close your cameras. Thank you, everyone. This marks the end of our preparation time. Just a short reminder, today's debate is on the topic whether or not cryptocurrency issuers must maintain reserve transparency consistent with international financial stability norms. As well, just a short reminder, please keep Mr. Sanchez-Cortez Macias's video in your gallery view so you can see the visual cues. Yellow card for 30 seconds left and red card for your speaking time being up. Of course, when you see red, don't get booked, you can comfortably conclude your sentences. And thus, University of Vienna, you have 4 minutes for your opener.
Thank you. Am I audible and visible?
You are.
Okay. Then I will start in 3, 2, 1. Honorable judges, esteemed opposition, our case is straightforward. If companies issue crypto assets and ask the public to trust that those assets are backed, stable, or redeemable, they must be transparent about the reserves behind that promise. Because financial crises do not begin only when risk exists. They begin when people trust a system whose underlying fragility is hidden. That is why we support this motion. Let me clarify our scope carefully from the outset. We are not talking about all cryptocurrencies in the abstract. We are talking about those cases in which an identifiable actor issues or manages a crypto asset and creates reliance through backing claims, reserve structures, or promises of stability. If there is no reserve, there is no transparency obligation. But if reserve-based trust is created, then transparency must follow. That is our case. When people invest in such products, they are not only taking market risk, they are relying on the existence and sufficiency of reserves controlled by an issuer. That creates issuer risk. And once public trust is invited in that way, it must be justified. That principle is already reflected in modern law. Under MiCA, issuers of asset reference tokens must maintain reserves covering liabilities. Under the Genius Act, stablecoin issuers must maintain identifiable one-to-one reserves. So our argument is not that crypto is identical to banking. Our argument is that where products function in a similar way by creating trust through claims about backing, the same basic stability principle applies. The reserves behind those claims must be visible. The opposition will try to say that crypto is different. In some ways, that is true, but that does not answer our case. The question is not whether the technology is different. The question is whether the danger is created by misplaced trust and whether that is different. And it is not. Whenever people place value into a system and rely on it to preserve or return that value, the same risk arises. What happens if the trust is misplaced? And when trust breaks, collapse is rarely gradual. It is sudden. That is why this debate is not just about individual investors. It is also about financial stability. When doubts arise about reserves, redemptions accelerate, liquidity disappears, and panic spreads. That is precisely why international financial stability norms emphasize transparency. Not because transparency eliminates all risk, but because it helps reveal fragility before it becomes systemic disruption. The opposition may also try to submit that regulation could harm innovation, but our model is limited and proportionate. We are not importing every banking rule into crypto. We are applying a basic transparency principle where reserve-based trust is created. That does not destroy innovation, it simply ensures that companies cannot build public confidence on claims that cannot be verified. Honorable judges, our team line is clear. If you promise backing, you must prove it. For these reasons, we strongly support the motion. Thank you.
Thank you very much. For the opening statement for the against position, Pantheon-Sorbonne University, 4 minutes.
Thank you. Can you see me and hear me well?
Yes, but your camera is lagging a bit, so I would just ask non-speakers to close your cameras. Only the timekeeper and speaker should keep theirs on. Please try again.
Okay, is it good?
Yes, it's lower lag.
Okay.
Thank you.
Okay, thank you. Then I will start in 3, 2, 1. Dear judges, dear opponents, We all know that one person, that friend who started investing in Bitcoin in their bedroom, pretending to be the next Wall Street genius while explaining the blockchain to anyone who didn't ask. We love, but what is actually behind the screen? The proposition wants you to believe that the answer is a traditional bank vault that needs a traditional auditor. They want to treat a digital revolution like a 50s savings account. But as any true expert knows, you cannot measure the Internet of value with the broken rulers of the past. Innovations dies when we force the technology of the future into the bureaucratic boxes of the past. Let's look at the legality reality of 2026. Just months ago, in late 2025, the Financial Stability Board admitted in its thematic peer review that the global implementation of its crypto recommendation is fragmented, lagging, and fundamentally inconsistent. Why? It is not because of a lack of will. It is because major jurisdictions are finally realizing that copy-pasting traditional banking rules onto blockchain technology simply does not work. It is a legal mismatch. While we agree with the basic definitions of issuers provided by the proposition, we reject the interpretation of international financial stability norms. These norms, such as the Basel III requirements or legacy liquidity ratios, were designed for centralized fractional reserved banks. We define transparency not as a quarterly paper audited by a Big Four firm, but as an on-chain, real-time proof of reserves. We contend that true financial stability comes from code, not from the same bureaucratic norms that failed to prevent the 2008 crisis. And this debate is not a wish list. We have to be clear. It is about the current reality of international law. The question is and must be, do we blindly apply failing legacy banking rule or allow a superior mathematically proven system to evolve as a lex specialis? Because let's be clear, if we strictly transpose these rigid, outdated norms today, that friend I mentioned earlier, and millions like them, couldn't play anymore with crypto. They would be locked out the financial future by the same gatekeeper who controls the past. By forcing these norms, we aren't protecting the user, we are killing the access. Our team believes that forcing traditional financial norms on crypto issuers stifles innovation, creates a false sense of security, and fundamentally misunderstands how decentralized technology works. We are not against transparency, we are against ineffective, outdated transparency. But we agree that there should be transparency, but that is adapted to crypto money. And as first speaker, Laura will prove why traditional norms are technologically incompatible and legally inferior to on-chain solutions. And then I will explain and demonstrate how heavy bureaucratic compliance actually increases global risk by driving the industry into dangerous shadow jurisdiction beyond the reach of any law. And ladies and gentlemen, let's not regulate the future into extinctions. I'm now ready to open the floor. Thank you.
Thank you very much. This marks the end of the opening statements. We'll proceed to hear the rebuttals. Starting with University of Vienna, for first rebuttal in favor, you have 2 minutes.
Am I audible and visible?
You are.
Okay. So I will start in 3, 2, 1. Honorable judges, esteemed members of the opposition. Before I get into the points of the opposition, I want to build upon my colleague Felix's second argument about how dangerous hidden risks in crypto can be. To make this clearer, let me give you a concrete example. In May 2022, the value of the Terra, the most popular stablecoin, collapsed, wiping out almost 45 billion US dollars. Terra's reverse system was basically a stablecoin. And it was made up in a way so that always the coin, the Terra, could be swapped for the Luna, another cryptocurrency. On top of that, a heavily subsidized 19.5% yield on Terra deposits was offered, which attracted huge numbers of users, which was, of course, a Ponzi scheme. Many small investors didn't realize this, and they ended up suffering the biggest losses when everything collapsed. To show why this example is especially relevant, it is evident that if there had been clearer transparency requirements, such as we suggest, especially since Terra wasn't supervised by any authority at the time, and had the risks been more visible, many investors would have approached it more cautiously and would not have suddenly lost trust in the Terra. Coming to the arguments of the opposition, they raised concerns that innovation might be impaired. However, there is no logic link between making the reserve transparent and the loss of innovation. Moreover, for minor issues, these rules would be applied less rigorously, because the international financial stability norms also apply less rigorously for minor financial players. Also, I want to emphasize that these rules are soft law and therefore are not directly applicable. Because of all this, we need these transparency requirements to ensure a stable market. I therefore end my speech. Thank you.
Thank you very much. For the first rebuttal in the against position, Paris 1, Pantheon-Sorbonne University.
I will take the lead there. Am I audible and visible?
You are.
Perfect. Then I will start in 3, 2, 1. I will start my argument with responding to our dear opponent. The proposition argue that cryptocurrency is dangerous and that it leads to major crises and such as Ponzi schemes and they are losing their house, etc. We do not argue that it needs to be prevented, and we need to be clear on that. We argue that we need to be very clear on the effectiveness, on the tools that are used to prevent that to happen. This is very clear that we can't apply tools that were usually designed for banks blindly to cryptocurrency. The banks or traditional finance are built upon intermediaries or delaying reporting or trust in auditors. Crypto, by contrast, is built on real-time public cryptographic verification. So the question is, the question is not do we need transparency? It is what kind of transparency do we need? And the proposition assumes that some traditional tools are effective. This is not for crypto, this is not progression, this is regression. We already have transparency in some way. We have continuous visibility, we have open access data and mathematical verification. So we can't compare it to traditional finance. And to finish with my argument, the proposition argued that all sorry, I lost my word. The convention and everything that is in place is soft law. In law, it is clear that soft law is still law. It leads the way. It constructs customs, and it is very important. This is a very efficient, legal a path to follow. So we will argue now to finish that you do not make a transparent system safer by making it more opaque. True financial stability comes from rules that fit the technology.
Thank you very much. For the second rebuttal in favor, University of Vienna.
Thank you. Am I audible and also visible?
You are.
Okay. I will start in 3, 2, 1. Honorable judges, esteemed opposition. At this stage, the central clash in this debate is very clear. But before I come to my speech, I want to go into what the proposition said. They said that because we are still answering a case, like this debate is not about treating crypto like a bank account, like they submitted, and we are not trying to argue this. It is about whether actors who create trust through reserve claims must prove that those reserves actually exist. And also, when they say transparency already exists on chain or that the legal framework is not yet perfect, that still misses the point, because seeing transactions is not the same as knowing whether the reserves behind those promises are real. The opposition says crypto is different. We say that may be true in structure, but the relevant risk is still the same. Because whenever people rely on a system to preserve or return value through reserve claims, one question becomes decisive. Can that trust survive stress? My teammate has already shown you why transparency matters in practice. The Terra Luna collapse was not only important merely because the system failed. It was important because people trusted a system whose fragility they did not understand. And that is exactly our point. The opposition keeps trying to answer a case we are not making. They say transparency will not solve coding flaws, hacking attacks, or all market volatility. We agree, that is not our claim. Our claim is narrower and more fundamental. If a system depends on trust in reserves, those reserves must be visible. That is a baseline condition and does not attempt to complete or cure every related problem in crypto. The opposition also says that we are using the wrong benchmark because they were designed for banks, but that misunderstands how these norms work. They are not rigid, identical rules that erase all differences between markets. In many cases, they function as soft law, guiding states and regulators while also allowing flexibility in implementation. That is exactly why they do not destroy sovereignty and do not automatically suffocate innovation. Thank you.
Thank you very much. For the second rebuttal in the against position, Pantheon-Sorbonne University.
Can you hear me and see me well?
Yes.
Thank you. Then I will start in 3, 2, 1. So you talked about the FTX, and we need to accept that it was a failure of transparency, but it was not a failure of blockchain's transparency. It was a failure of centralized fraud, because the FTX collapsed happened because it behaved like a bank without regulation, and we must stand by that the rules that are now applied to crypto is not adapted to like the reality. Because even though you can argue that this is the same risk, this is still about money and how we use it. It is not the same structure. It is not happening the same way. We cannot compare a Wall Street trader to the young guy in this bedroom buying crypto money. So we need to accept that the structure is different and takes a risk that is pretty much the same, and identify how to control this and make good regulation to put transparency that is going to be effective. Because as we've seen in law, a really important principle is effective regulation, and the cost of legacy compliance is a death sentence for some decentralized innovation. If the rules are too rigid and don't fit the tech, issuers won't just comply, they will just leave or even destroy the system. And in international law, a regulation must also be proportionate. If you treat a small crypto startup like Goldman Sachs, you trigger regulatory arbitrage, and this is a massive risk for the global economy. Instead of bringing crypto into the light, these rules drive capital into shadow jurisdictions, offshore tax havens with zero oversight and zero consumer protections. The true stability require a lex specialis, a specific law for a specific tech. And if we stick to the bureaucratic boxes of the past, we lose the players, we lose the data, and we lose control to the financial future. Thank you.
Thank you. Thank you very much. We have had the rebuttals from the two teams. Now for the concluding statements. University of Vienna, 2 minutes.
Yes, am I audible, visible?
You are.
Okay, perfect. I will start in 3, 2, 1. Honorable judges, esteemed members of the opposition. To conclude my speech, I want to emphasize again that our side has brought up many interesting points that I still want to emphasize. First of all, we said that it is necessary to just protect the stability of the market. it is important that we have a stable crypto market, because only that way the crypto market can develop in a good way. We saw this with the Terra Luna collapse, for example. There was just no stability in the market, and therefore so many people lost their money. These are people who really, really worked hard. They just want to invest to make just a little bit more. And then suddenly there comes this big market collapse without any transparency, and they lose everything. Their life is ruined. Therefore, we must ensure that the people are protected, and especially investors need to be protected. The other side repeatedly argued that the cryptocurrency and the traditional financial market are not similar. And honestly, we totally agree. They are not similar. However, the motion specifically speaks about consistency. And we do not argue that they need to be the same. We argue they need to be consistent, meaning that they are just parallel to each other, that they're intertwined with each other, that they work the same. Now you might ask why this is important. It is important because there might be any gaps in the law. If we do not regulate both parts in the same manner, there might be gaps, and these gaps will be definitely abused by people who will take money out of poor people who just want to invest to just make a bit more. To conclude my speech, I want to emphasize again that we need this regulation for this new matter, otherwise many people will lose their money. Therefore, we urge the judges to confirm the motion as written. Thank you very much.
Thank you very much. For the concluding statement in the against position, Paris and Pantheon-Sorbonne University team.
I will lead the conclusion. Am I audible and visible?
You are.
Thank you. Then I will start in 3, 2, 1. I will conclude my argument and my teammate argument by concluding that this debate was never about whether transparency matters. We are not here to justify breaches of finance. The examples that were said by the propositions are sad, but come from fraud. And the fraud is still possible even with regulation, if this regulation is ineffective. So the debate is about what kind of transparency actually creates stability. The proposition asks you to believe that copying traditional financial norms into crypto will make the system safer, but we have shown you 3 things. First, these norms were designed for a different system, one that is centralized. Crypto is not that system. Second, imposing these rules does not eliminate risk, it displays it. When regulation is ill-adapted, actors do not comply. They relocate, they disappear into jurisdictions where no oversight exists, which leads to crisis, and the example that were said by the proposition. And the most important thing is you do not make a transparent system safer by making it more bureaucratic, and we want to very emphasize this. You make it safer by making it intelligible, verifiable, adapted, and flexible. So the proposition offers you the illusion of control. We offer you something more demanding. We offer you effective regulation, adapted regulation. So the question here is simple. Do we regulate the future with tools that understand it, or with tools that were never designed for it? Because if we get this wrong, we do not just slow innovation. We pushed it beyond the reach of law. For this reason, we strongly urge to oppose you. We strongly urge you to oppose the motions. I'm sorry.
Thank you. Thank you to both teams. Well done on reaching your concluding statements. Well done on wrapping your day 3 match and your group phase matches. You can all now relax. You're no longer under evaluation at this point. And really, congratulations on wrapping up your day 3. It's been a pleasure to observe your teams from your first match up until today. Of course, the judges, as in previous matches, they have the time to review and submit the scoring cards. And once we have that confirmation, we'll be sharing them with you, of course. But already now, I would like to invite you, as is our traditions for the matches, to reflect perhaps on the research, on the preparation for the arguments, on the debate itself. And if you perhaps heard familiar arguments from the opponents, or maybe even during research that you were familiar with the topic. Starting with Mr. Laffer of University of Vienna.
Yeah, thank you very much. First of all, I would say it was a really, really interesting debate. I think also the other team did a really good job. I think I really saw that many of the arguments of the other team, we also thought about it, so there were really a lot of similarities. What I can say with research, it was this time probably most difficult because also me as well as my teammates, we hadn't much information about crypto we weren't so in this field. So it was really difficult to just understand all these principles and like that. But still, I think we did a okay job, and we also want to congratulate the other side for also doing a really good job.
Thank you. Ms. Castellani?
I also had a lot of fun preparing this debate. It was definitely the most difficult that we had to prepare so fast. And even if Alice and I have the luck to also possess a bachelor in economy, cryptocurrencies is not something that I deal with every day. But it was still very interesting, of course. And we really did a great job. I think as our opponents, the arguments were very interesting, and it was sometimes difficult for us to note them and try to respond in this small time, but it was definitely interesting as always. And yeah, I'm happy.
Thank you. Mr. Grafinger?
I can only affirm what has been said. It was very interesting to research for this debate and also to talk to people I know that did have more of a clue of the topic than I do. And I've been wanting to research about this privately for a longer time, but I've never gotten to it, especially because it's such a broad topic. So this was really interesting. And then I also want to congratulate the other team. Unfortunately, a team member had to leave, but she did a wonderful job. And also Ms. Castellani, I have to say, especially what I noticed was that your rhetorics still came through very well, even though this is an online meeting. And I feel like that's a very hard thing to do in this format. So you did great on that and in general. So yeah, thank you guys.
I just want to take the time to thank you very much for this kind of compliments and reaffirm my congratulations also for you. I did not get so far, but of course it was very interesting to debate with you.
Thank you.
Great. Of course, you will have one more chance to meet. Of course, there's 2 chances, if perhaps all the way to the finals. Their teams can meet if they met in the group phase. So we've had these situations before, but the more closer opportunity for the teams to meet again is during the mid-edition networking break. So you'll be receiving further information on that by email, of course, but it will be following similar structure if you were participating in the January event. So this is an expansion on that. Of course, you will have your teams from the group as well as the other groups present. So we really do encourage you to do that. Of course, you can keep in touch through the social media channels. We try to tag everyone on LinkedIn when possible. But speaking of giving a correct shout outs or just acknowledging the progress, really well done to your teams. As I said, from day 1 to day 3, it's been quite a journey. Is there anyone your teams would like to give a shout out to for support or motivation for this journey? Perhaps starting first with Paris and Pantheon-Sorbonne.
Just to begin, there was definitely an evolution on our side from the first to the last debate. Maybe not the last, but the debates. This was our first a few weeks ago. And we definitely learned a lot about the rule, the formal obligations of this debate, but also to debate and be quick and be flexible. So it's always interesting. And I want to shout out to my teammate who left, but we really worked really well together privately, and she supported me a lot as I supported her. And also during the debate was very pleasant. So yeah, that would be it.
To University of Vienna.
I would also like to emphasize that it was very interesting to sort of learn along the way and also see the improvements we could make. And we want to shout out, of course, our coaches. So Magister Strebel and Katharina Tuida. We're very thankful for having them. And of course, I will shout out my teammates, Leonhard and Lily, which have been accompanying me on this journey, so to speak. Yeah, and I want to also shout out the organizers and especially also Mr. Lorraine, because he has been very impeccable in organizing and also being assistive and very quickly responsive when it comes to any matters. So thank you on that end as well.
Yeah, I also want to again emphasize what Felix said. Thank you very much to our good friend and colleague Lily, who is unfortunately not here today. And also thank you very much for our coaches, Magister Martin Strebel and Miss Katharina Tuida, who also supported us a lot. And I think personally, I also want to thank my family and my girlfriend, who also supported me a lot when studying for these debates also. And also thank you for the other team who also was willing to participate in this debate today.
Thank you very much. Passing to Professor Lozange.
Yes, that was a great match, I have to say, especially knowing all the constraints you have, of course, and yes, a difficult topic, and as well we see the progression through the group phase. I want as well to thank as well your student associations, because you have on one side ELSA Paris, Pantheon-Sorbonne, and the previous participants of last year, who gave you some information, I guess, for this edition. And the first participation as well for the Juridicum, I see the logo behind, Juridicum Debating Society, I think. So well done as well for you are the pioneers for the University of Vienna in this competition, and we hope there will be, of course, many more teams participating from your university through maybe your debating society. So in a few days, the three judges who know very well the competition, they will send us their, of course, score sheets. We'll share it with you, the results, and then after that there will be the ranking for the group. And we remind you that there are two other teams that they will have their match on Friday, so if you have a bit of time to watch as well their own match, you know them, so the team in United Arab Emirates and the team in Malta. And indeed, we'll be happy to see you at the networking event in April. So check your email box when we send you the invitation, the day and time, and you will meet all the other teams. So a lot more networking to do during that moment. So many thanks again, and it was a pleasure. And thank you again, and wish you the best again for the rest of the week. I know that you have other challenges as well during this week. Many thanks. Thank you. Bye-bye.
Thank you, everyone. Well done.
Thank you.
Thank you so much. Bye-bye.
Bye.